Our market master of the day is Krishna Kumar Karwa, Managing Director at Emkay Global. Mr. Karwa, great to have you with us here on the program. Thank you for your time. Is it banks once again which are doing bulk of the heavy lifting in terms of contributing to whatever earnings surprises on the positive side we are seeing? And what's your overall sense of how the earnings season has gone so far? I think about 40% of all companies have reported.
So yes, what as you rightly said, banks have given very good numbers. But the question is that are we looking at peak in terms of the bank's profitability, credit costs, etc. And going forward, or in the next few quarters, or maybe 2-3 quarters down the line, how do you expect the banks to perform? My question is that yes, numbers have been very good for banks, and banks have recovered from their lows in the last 30-45 days. But in terms of valuation multiples, will we see an expansion of further valuation multiples, or are these most of the banks now getting into a territory where they could be kind of earnings compounders? So that is the key question that one should be focusing on. Yes, results have been broadly. I have not seen too many earnings upgrades across the board. Most of the time, I mean, the numbers have been good, but are analysts upgrading their numbers, except maybe in autos, we did see upgrades coming up, and maybe in cement also. But in banks, NBFCs, etc., broadly, I think the growth is all factored in.
By the way, a space that has come back with a bang is autos. As we speak, Tata Motors, Apollo Tyres, Bajaj Auto are all sitting at fresh 52-week highs. So don't lose sight of that. Tata Motors, in fact, is the biggest Nifty gainer this year. It's up 30% now. Mr. Karwa, good morning and thanks for being with us. Always great talking to you. So this space, right, I mean, it's come back after a lull of, I think, 5-6 years. And it's not that demand has come back in a big way. I mean, Tata Motors is still facing a lot of challenges in its global business. Bajaj Auto is still seeing, some export hurdles. But the stocks are at 52-week highs. Do you think the stocks are pricing in a major structural recovery? And how are you feeling about this sector now?
Not talking specific names, but if you look at the two-wheeler space, I think we are in for a massive replacement cycle picking up. And if you look at the volume, I think we are still 20-25% below our peak volume, which was in FY19. So it looks like that the replacement cycle is picking up, and that should be the reason why you will see possibly all the two-wheelers delivering good numbers. So I think that is what markets are factoring in, and we are seeing an uptick in many of these two-wheeler names. As far as passenger vehicles are concerned, yes, I think the major is having a lot of product launches, and we have seen that whenever new product launches are there, the numbers tend to do well, and the stock prices also do well. So that's what we are seeing. I think as far as commercial vehicles are concerned, possibly this quarter may be the peak in terms of the numbers, and maybe there is a slowdown that we expect in commercial vehicles. So yes, it's a mixed bag in terms of various segments of the auto segment market.
Hi, good morning, Mr. Karwa. What about the new age companies? I recall a few months ago when we chatted, you were talking about them speaking now the language that the markets want to hear. Is the language, is the actions good enough? If rate hikes are behind us, then that helps some of these companies, right? Because of the discounting factor. Any of them are looking attractive enough to get in, or have you gotten into any of them?
So yes, I think some of the companies have delivered also on numbers, and market is also looking at them positively. So every business has to be looked at independently. So earlier we used to look at all platform companies with one stroke, but I think now, I think the understanding of the business models is maybe much better than what it was earlier. And I think we should look at every platform company independently and value them. And yes, I think even the managements of these companies now being listed for more than a year or 1.5 years. So they have also become much more transparent in terms of communication and what the public market requires. So there are opportunities, valuations have become attractive, and if you feel that there are some winners in the segments, then they should be invested in. A few of the companies have started attracting a lot of investor interest. So yes, not to ignore them carte blanche, but independently, I think they should be looked at.
Mr. Karwa, MK has a pretty wide canvas in terms of coverage for mid caps and in the broader markets, broader universe. Run us through what do your analysts and team of analysts really like at this point? I mean, a few names would help. Top of the list.
Honestly speaking, Prashant, names we can't talk, but as I've always said that mid-cap and small-cap investing is all about bottoms up and not on a top-down basis. So there are quite a few companies across sectors where valuations are attractive and growth prospects also seems to be attractive. I think that's the way to go about it. But having said that, I think more than the small-cap, mid-cap, I think there are some segments which have been ignored by the market for some time, and where valuations have become attractive. So we believe that the whole insurance space has been in the doldrums for 3-4 years now, and valuations are attractive, and that's one segment that one should be looking to invest in from a 2-3 year perspective. And banks, again, there are some of the mid-sized banks where valuations are attractive and they could possibly deliver. So maybe they are in the mid-cap segment, but they should be also invested in. We are also positive on some of the cement companies where we believe that going forward in terms of input costs, etc., things are much better and valuations also seem to be good. So these are some of the segments that we continue to be positive upon. In fact, some of the IT companies, despite the headwinds that the sector is facing and as reflected in the commentary from various large biggies, but some of the smaller companies individually seem to be doing well, and if one is willing to be patient, then they should be invested in. So as I said, small cap, mid cap is all bottoms up.
Okay, individual ideas, right? I mean, I just wanted to throw this at you. I don't know if you guys track it, but the city gas distribution companies have been doing pretty well. I think it's price hikes that companies like Mahanagar Gas have undertaken, because of which there is a straight positive impact on the operational performance for their margins have looked good. But how do you feel about this space?
Honestly speaking, yes, we do have coverage, but do have an understanding? No. So I would prefer not to answer this question.
Okay, we'll leave it at that then. Thank you. Thanks a lot for joining in. Appreciate your thoughts and appreciate the, your candid views on sectors as well.